How are we all doing? Morning, Marion. Gold already? Do we have to watch gold already? I'm going to have to get John out really early, aren't I? Not doing gold. Morning, Cannelly. How are we doing? Morning, Steve. Morning, Virginia. Morning, Boga. Morning, Stevie. Morning, David. Morning, Diamond. Morning, Rob. How's everyone doing? Hopefully, we're going to get some yen movement today to the downside. Seems to be going up quite a lot at the moment. Morning, Vanny. Right. Let's kick off with news. So today we have the CPI flash estimate for the Eurozone. I'm expecting this to be positive this morning, but we will see, just based off the German CPI preliminaries. We got the Tokyo CPI, which came out overnight, which was positive. So I was hoping that was going to increase the yen strength. Doesn't seem to have happened. So the only real red news we got today is this afternoon, 1:30, which is an hour before market open, which is the GDP for the Canadian dollar and the PCE for US dollar. We got PMIs, which are 15-minute after open. And then we've got the revised UOM and Lagarde speaking this evening. So 1:30, basically, US dollar and CAD. That's all we got today. Overnight news, not an awful lot. Morning, other David. Well, a lot of Davids, haven't we? Obviously, it's a very popular name in the UK, so that doesn't surprise me. Elon Musk, what are they up to? Elon Musk's team is making efforts to set up a meeting for him and China's President Premier Li. What that's about. UK GDP. Quarter went up. Positive pound. Retail sales 5. Nothing much else I can see overnight. Why can't you scroll down? Really annoys me, this feed. It doesn't load all the feed. Morning, John. Where did I get to there? CPIs. Credit Suisse turmoil removed the chance of a 50 basis point hike. There never was a chance of that. Okay, right. So no other news basically overnight. So that's all we've got to look forward to this afternoon. 1:30 is the CAD and the US dollar. So quick update on yesterday. Closed out afternoon, John. Morning, John, even. What time of day it is? I haven't slept very much. I had stuff to do yesterday, and I was up until 12 just doing stuff last night. And we've got massive winds in the UK at the moment, so it's really windy. So the bins were rattling. The dog was upset all night because there was noise. There was rain hammering the windows. So I've had about 3 hours sleep. So if I nod off halfway through, just poke me. So yesterday we closed out, what's the date? 30th. We closed out yesterday. Euro, Swiss and New Zealand CAD on ADR reversals. New Zealand, Swiss. No, we didn't. Sorry. Euro Swiss and New Zealand CAD. This is going to be a good one this morning. Euro Swiss. Close that one out. I'm going to have got a pen ready. Where have you put that today? Over there. There we go. Euro Swiss. Closed that one out yesterday. That was an ADR hit from Wednesday. From Tuesday. Closed out. And the only other closeout was New Zealand dollar CAD. When you're ready. So that was single again. ADR hit to the downside, reversal. Very quick and easy, these ADRs at the moment. Really nice. Just plodding through, basically. Morning, Johannes. Morning, Rahul. Can you explain how the H1 hedge file works? Yep, I can do that. We've got 4 minutes to the open. Let me just do this first. We closed out 850 odd on the H1 M5 yesterday. That's sitting in about 4.5% DD at the minute. So there's loads. I won't go through everything yesterday, but there's loads closed out. Euro yen, we closed out a bit of drawdown control. Pound CAD closed out some. Pound Swiss. That was the manuals I did, wasn't it? New Zealand Swiss. So there's a few bits and pieces yesterday closed out there. H4 closed out one. It's one trade yesterday. Pound CAD. That was a bullish. That was a buy. There we go. So H4 RSI extension, straight in, straight out. Job done. And H1 M5. So this is sitting in 5.6% DD at the moment. Obviously, it's constantly banking with 15% now on it, but it's sitting in 5.6%. So this is what I was interested in, how far we get here. Obviously, as you can see, the main reason this is in drawdown is because of the exposure. We're basically trading pretty much everything, every pair. So nothing is in DD to any extent that I would ever worry about. 0.68% is our biggest drawdown at the moment on pound odd on 4 positions, which is 3 shorts, 1 long. So you just need to adjust risk if you want to run this on prop, basically. But yeah, nice. This is 2 weeks. Well, 2 and a bit weeks, 2.5 weeks, isn't it? No, it's 14th we start. Yes, 2 weeks and a bit. So going very, very, very well, that one. But literally all it's doing, if you look at the set file, is it is risking 0.2% of the balance on half an ADR. Yeah, so it risks half an ADR. It puts its stop at half an ADR, calculates a risk of 0.2% of the account on that distance. Then as soon as it's placed the stop, it removes the stop because obviously it's position trading and hedging, so it doesn't use a stop loss. It's not using any filters on RSI, any higher time frame, no moving averages, no higher time frame moving averages, not using ADR, not doing anything like that. It's using a 1.3 lot multiplier. So if it takes the position and it goes into drawdown, it goes in with 1.3 times the initial size on the second entry and so on and so forth. It's scaling in half an ADR apart, and it closes everything out when we've got half an ADR in profit in pip. That's it. Simple as that. And it does drawdown control of 1/3 of the position when it moves 1.5 ADR against. So that's literally it. It's that simple. It's a real blunt instrument set file there. And it literally is just told to, as soon as you get a reverse alert, get in the market. Let's try and find what's open. So, yeah, there we go. You can see here, good example. So literally, reversal alert, there's your entry, got in, long. Reversal alert, there's your entry, got in, short. It's that simple. Nothing complicated. The thing that will make it work and why it works is because of the way the drawdown is set up with 1.5 ADR and a half an ADR scaling. So we're not getting out of our positions until 1.5 ADR, but we're scaling in a minimum of half an ADR apart. So typically what will happen is when you get up to, if you get up to 3 positions, these are the ones which will have to do drawdown control and will probably start to make either a very small loss, a break even, or a small win. Everything that works on 1 or 2 positions typically will just bank half an ADR in profit. So 0.2%. And it'll just keep banking that consistently. As you can see, like somewhere between 0.5% to 1% a day, 1.5%, something like that. But it's keeping on top of this drawdown. Nothing's actually got anywhere near getting to a drawdown control position at all yet. But it's not been running long enough, is it? Hedging set file, not that, hedging set file. That's the wrong one. Sorry, not hedging set file, the sentiment set file. banked 6 grand. I found out why it wasn't working, I think, and I fixed it. So these should all close out in profit. So it should bank, everything in profit should get banked on the next 4-hour close. So we'll keep an eye on that today. Markets open. Pre-market 15-minute on the DAX has gone massively long. You've hit target already. Good job. There you go. So this is pre-market 15. You had about 15 pip stop, 25 pip move. Anybody take that? That's nice, wasn't it? Morning, Ignatius. How are you? So looking at the DAX today, we've got multiple gap fills to the downside at the moment. So the one from this morning is near as damn it, I think, done already. I would say that's probably completed. We've got this one from yesterday, which we didn't do, and we've got this big one from Wednesday, which we haven't filled yet. So there's still a lot of downside potential on this, although obviously this morning it's decided to go long. So huge move potentially on this DAX. So I've just started a fiddle crest evaluation, and I shorted the DAX this morning on a little 0.5% speculative trade. So I'm looking for it to go short, obviously. But yeah, so there's loads and loads of downside potential on this at the moment. From an upside move, we've got pretty much 100 or so points to the upside from where we are at the moment. But we're doing this gap fill. So once this is done, now, we're left basically with just lots of downside target gaps to go for. So I'm hoping what we're going to do is this morning just poke out the highs and then reverse and try and get a down day in today. We've got the US dollar news this afternoon. So there's potential for that US dollar news to pump the index, to pump, and then the indices to drop on the back of that. So we'll see what happens. But obviously at the moment, the DAX is run out the highs. So if you've gone on the pre-market, you're done already. But the 5-minute opening range is a big one this morning. Nice big candle there. So we'll see where we go from there. 5 minutes, ADRs. I'm going to talk rubbish today, just to let you know, because I'm so sleep deprived at the minute. I really can't get my words out. ADRs, average daily ranges, none hit today. The weeklies, most of the weeklies at the moment are yens. So those are all very nicely extended on the weeklies. As we know, the yen has been very weak. Basically, all it's doing is mean reverting the safe haven run, which for a lot of these now is actually complete. A lot of them aren't, but a lot of them are. So there's potential now for us to come down and do all these downside targets that we've basically made on the way up. So I've got lots of shorts on yens at the moment on this account. So hopefully we're going to get some downside movement on these today. If you look through them all, Aussie dollar yen, got sell on up there. That's not quite done the gap fill yet, but it's moved 50% into that one and rejected. Nice tweezer tops there, coming down into this area or down to here. Could well come up to there, and obviously we've got these gaps at the top which haven't been filled either. So there's targets down there and targets up there. So that could go either way. The CAD yen, that one obviously is just starting to turn around. I've got 2 positions on that one already. Gap fill is completely done on that one. We have still got this one at the top as well to do. So, but you know, they haven't done much of a profit take move really on this whole leg here. 3 days up, look, 2 days up. So lots of potential for downside on that one today. Swiss yen, same thing. We haven't quite got to that gap fill yet. We've just sat into that propulsion gap. This is where we broke the low and the low there, this one here. So we did find some sellers, pushed up again. So I would suspect we're probably coming up to here. So an ADR on this today would be a very lovely entry short. However, it could just come back down to these first and then come back up and do that later, one or the other. Euro yen, shorts, massively extended that one, lovely big downside. Was extended on the hourly. We've had multiple extensions on the hourly on the way, and all we've done is like popped straight back down and got back embedded again. So looks good for shorts at some point. That's completely filled the gap, at the highs. This is the resistance area we drew in here, which is these two lines, which is that area there and that wick. Straight into that, straight out of it this morning. So there's a potential here for a break in structure. So we will see what happens there. So that's pretty good. Very tired. They're all tired, all of them. Look, the pound yen, yeah, that's done the gap fill. Not exactly filled it, but pretty much. So if it does come up and touch into the high there today, we should get a reaction. That one hasn't had a profit take all the way. So very, very, very extended. Pound yen, New Zealand yen, same thing. Now that's done, complete. We have got the other one up there, but that's completed. Much more downside potential. And US dollar yen, that's got a long way to go. Long way to go. So obviously the US dollar could rally today or it could drop depending on what happens with the news. So we'll see what happens with that one. But yeah, all the ends very, very extended at the moment. Obviously big strong pushes up. Morning Mumo, your work is appreciated. Excellent, nice to be appreciated. Morning Freeman. So there's your weeklies of the yen variety. We have a US dollar CAD as well. So where are we? Monday. Monday's there. You can see this one's plummeted. I've got two positions on this one. Basically, my average is at ADR. That's the propulsion gap we're coming back up into. Don't know when, but hopefully it'll just be sort of like a 2-3 day move. So today, potentially, see what happens with the news. Obviously, the US dollar and the CAD have both got the news this afternoon at the same time, which complicates matters. So 1:30 this afternoon, if we were to get, for example, a strong PCE number and a negative GDP on the CAD, US dollar CAD is going to go through the roof. If we get positive news on both, we're probably not going to get very much but a whipsaw. And obviously, if we get the opposite, then it's going to come down twice as hard. So it's going to be a big day for the US dollar CAD this afternoon, potentially. Lots of opportunity there. Nicely extended on the hourly. We might even have a 4 hour. Yeah, got 4 hour extension on that as well. Obviously, you see where the targets are. Up there somewhere. That's a nice 72 bounce as well. We have also got, that's it. So literally it's US dollar CAD and every yen pair. There we go. So there's your ADRs and weekly ranges covered. There's your 5-minute opening range on the DAX. So let's see where we go from there. Might add into that. Sure. Where's the account? If it works. Finally Friday. Yes, morning Anna. Finally Friday. It's taken a long time to come. It's taken about 4 days to get here this week. Right. What was it? So I'm trying to find my dashboard. Really not with it this morning at all. Aussie dollar, New Zealand dollar. How many people have we got here? 70. Not bad. Let's get some thumbs up. I don't know how many thumbs up we've got because I can't actually see the stream at the moment, but we've got 70 people in here. So if there's less than 70 thumbs up, we need some more. Aussie dollar, New Zealand dollar. So I'm just going to run through the H1 RSI extensions while we're waiting for the DAX. So the 10-minute opening range is an inside bar on the 5. So there's your nice, simple 5-minute opening range breakout today. Very simple levels, one way or t'other. So the Aussie dollar, New Zealand dollar. So on the hourlies, we've got Aussie, New Zealand and New Zealand CAD. So Aussie, New Zealand. So that has just given us a reverse alert this morning there. So we had a nice little W pattern down there. It's pushing very nicely this morning and just pulled back. So potential upside targets up here today. They're within ADR, Aussie, New Zealand. Hourly RSI extension. This is the range low play. So that was the initial entry off of RSI there. Didn't quite get to the 75 level, so it got extended, but not massively extended. Today is the first proper retest of this low. So this is the fourth test on the low. One of my old mentors used to say to me, you knock on the door 3 times, it's fine. If you knock on the door the 4th time, you're going through it. So we will see. That holds up true sometimes, roughly about 50% of the time. Got a new John Wick, by the way, Brian made for me. You can't actually see it, but down there it says 50-50, your call. And he's flipping a coin. So instead of using his magic 8 ball, I've got so many John Wicks, I don't know where they all are now. There's Mr. 8 ball. So now we've got a coin flipping John Wick as well. I tried to make some more John Wicks yesterday on OpenAI, but I've run out of credits. You have to subscribe now. Very annoying. So if you want to make some John Wick OpenAI trading based stuff and send it to me, feel free. So yeah, good looking short there. If we are going to maintain this range, long, good looking long. If we are going to maintain this range, that's where we're bouncing from. Targets are up there. We've still got this whacking great target to the upside. So this is part of a big 4-hour second leg, potentially short. So I'm not surprised we're tapping on this low. But we're not getting through at the moment, are we? So we've got these targets up here still to aim for. So difficult to tell what we're going to do with this one. Personally, at the moment, there's no fundamental bias really in either way on this. So I would be quite happy, obviously, to go long from there. And if it drops, the problem with the drop is there's quite a big drop, as you can see. So 225 ADR is your next real proper support bounce. We've got a potential double bottom bounce there and a double bottom bounce there. So there's 3 levels coming up off this one, which will give you second entries, but we'll see. Hopefully it will just hold today and it will just pop up. The other one is New Zealand dollar. So that's extended on the hourly as well. Big extension in the hourly. In short, propulsion gap there. Oh, where is that? 28, quarter of an ADR. So you had the reverse alert on that this morning as well. There. That was the entry. We're in profit. However, there's not much of a drop on this one, so tricky that one. So bear with me a sec. So there's your 15-minute opening range in as well. So your 5-minute opening range and your 15-minute opening range on the DAX today are the same candle. So really simple opening range break today. Doesn't matter what settings you're using, that's your break. See where we go. Hopefully we'll get a decent one today. Got no news to drive us this morning though for the euro. Most we have flash estimates. Oh yeah. I don't think they'll do much. We're not going to hang around for 2 hours basically waiting for that anyway. So we'll see where we go. Right. So there's your hourlies done. 1st of April, John Wick. Yeah, we could do a 1st of April one. April Fool John Wick. Morning, Martin. Trouble is I've run out of credits. So yeah, I can't do any John Wicks because I haven't got any credits left. And I'm not paying just to get an AI to draw art for me. I'm too tight for that. Right, so let's go through all of these. Actually, the 4 hours I've pretty much done them, haven't I? So Aussie dollar yen is the first one on the 4 hour. We've done these yens already. It's pretty obvious they're all massively extended on the 4 hour. So that was the long. This is the short. Straight up into propulsion, starting to come out. So these are all massive 4 hour extensions. All of these say massive. Aussie dollar yen is the bigger one of the. Actually, no, pound yen, New Zealand yen as well. Both extended to 75. So Dropping down to M15 or M5, your reversal alert was almost in the same place today on both of these. So you've kind of missed these Aussie dollar yen. The pound yen is extended hugely as well to that level. That's the second entry on that one. We had a first one there, second one there. And the New Zealand dollar yen, again, in it short, looking for it to come back down. So yeah, very nice extensions on these. They're coming down nicely this morning. So a bit of yen strength coming through by the looks of things. What's the other yen extension? Euro. Double top bounce, very nice. And then we got the CAD and the Swiss. So all coming down off the top, off of that RSI extension. So all brilliant ones. Keane is a legend. Oh, Keanu. Keanu is a legend. I know he is. We like a Keanu. Right, so there's your yens. So we've covered the yens already, basically. They're all very, very good opportunities. Banks have pushed very hard to get back to these levels. All we're doing is riding the profit take move back down. So they've gone long. They were short to get out of those positions and then potentially drive a new leg. So we're just taking the profit take moves at the moment. Hopefully we get half an ADR out of them. Apart from that, we've got Euro US dollar. So Euro US dollar at the moment, nice double top area at the minute here, which we are reacting from at the moment. Push back down into there. So just about extended on the RSI. Obviously, if it does get a bit further, monthly range now hit on the pound odd. That's good. Why don't we hit our monthly range on the 31st of the month? Thanks, pound odd. That's useful. Ignore that one. So Euro odd double top opportunity. We've still got that little propulsion gap up there, and potentially that's where we're going if we continue. So that was the pullback play on the last one. So yeah, very nice opportunity short on that one as well. Not quite sure how far that's going to go. So if we're going to continue in the uptrend on this, i.e. we're going to get a weak US dollar, we're probably just looking for sort of a half pullback on that and then push up into that previous high, which is January. So this is the high of the year. So that's your yearly high and January's high there. Okay, so that's Euro US dollar. Pound US dollar also extended. So that's just rolling over now at the highs. So looking for a push back down into here. Probably an ADR hit to the downside. Really good support area, resistance area here. There's lots of levels here which are going to potentially act as levels for limit orders to trigger. As you can see, they have triggered beautifully there. We got a lovely shooting star formed. So reversal alert obviously was there this morning. There's your reversal alert. So yeah, it's in and it's working very nicely at the moment. But obviously we've got US dollar news this afternoon. So 4-hour RSI extension, M15 reversal alert. It's just happened actually and just retested. So there's your M15 and there's the retest of it. So break of that low, we should get a nice drop down to ADR hopefully today on that one. That's it. Done. Can I go back to sleep now? That's going to be a good short. I am in short. So we're at the 5-minute opening range, or 5 and 15-minute opening range. So looking good for a short at the minute. I think there's a lot more downside on this DAX, a lot more downside than upside at the minute. So we'll see. Aussie dollar yen, it's close to TP surely. Okay, let's watch this TP. Ready? Go. Ta-da! Look at that. Live on air. Closed out. Half an ADR. Good, isn't it? Aussie dollar yen. Out. Has anybody got any other pairs they want to look at? or anything else they want to discuss. Price of bread, milk, world politics, global warming, President Trump getting arrested. Not yet, hopefully. Funny. No news today. Everything's just ticking along. There's not really anything else to discuss, is there? I haven't got anything else to talk about today. So you're going to have to come up with some subject matter, because I ran out yesterday because I waffled for ages yesterday and the day before. But I only managed to clip half of it out. So if there's anything else you want to discuss, let me know. I just started a Fidelcrest. Oh, by the way, yeah. So if you want to get funded with Fidelcrest, they have an offer on for the next 13 hours. 13 hours. So I've just signed up, which is this account here. So I'm taking an evaluation with Fidelcrest. Wow, that's in a really weird place. So yeah, Fidelcrest, pretty good. They're a little bit more expensive than other prop firms, but if you go, and the reason I like Fidelcrest, which is pretty unique to all prop firms, is if you go with a normal sized account, i.e. don't jump up to the huge sized accounts and go for a 50k, it's 449 euros, which is a little bit more expensive than the rest. However, your profit target is only 5%, and it's a one-stage evaluation, because stage 2, you actually get a profit payout. So it is a 2-stage evaluation, but it's only really one stage, and then you have to sign a contract for stage 2. But at the moment, because we've got a 2-for-1 offer on for the next 13 hours, you're getting 100k of funding for $449, because you get 2 50k accounts with only a 5% target. Bargain. Can't fault it. So I've signed up for 2. Well, I've signed up once and got 2, obviously. So I've got 2 evaluations running at the moment. I'm just trading in one at the moment, and I'll leave the other one, pass this one, and then trade the other one. So, but all good. Euro New Zealand. So yeah, lots of downside targets on Euro New Zealand. You can see I've had lots of trades on this at the moment. It's been really decent mover, this one. So had a long in there, had a short there, short there, short there. It's not quite extended enough for me to go long, but it has gone long. This was one I was going to take this morning because of the retail sentiment. Look, Euro New Zealand. No, sorry, it was Euro Odd was the one I was going to take this morning. But they'll both be doing the same thing, going long, because the retail sentiment on it basically is 6. So, or combined is 6. So we're in a range, and we have been in a range now for coming up for 2 weeks, pretty much. So higher the range, lower the range, middle of the range, not really an opportunity. So we've got an RSI extension to the downside, which you could have taken, obviously, and that would have worked out nicely. So M5 reversal alert was down there. So yeah, beautiful. Target, let me just get rid of that box. What is that box? Right, so this is this range high, basically. I can get rid of it. So targets to the upside, you've still got targets to the upside in this range. That accumulation break there on the 5-minute, but if you look at the hourly, it's pretty flat. So ADR really to the upside on that, but you've missed the trade. So there is still big downside targets to come down and fill, but you know, at the moment it's a range high sell and a range low buy. So any ADR or RSI extensions you get on it, really I would take. What's the bias on it? It's a buy. So Euro New Zealand is a long. Fundamentals are mixed. As with everything, fundamentals on everything are pretty much mixed at the moment. So COT bias is long, retail bias is long because retail are shorting it. So it's a long. Better off taking longs than shorts, but as you can see, every short I've taken has worked as well. It's just basically, anything that's range bound. The whole market is range bound at the minute, basically. So there's nothing really that's got any opportunity to squeeze. So you can trade it in any direction. So I would wait for us to get pushed up into the highs and then take a short. If it comes back down here, go long. If it actually breaks that low, I would wait to get down to here or both, and long it down there. Likely it will start to form a new range here. So this will become your new range low, which was your previous range high. So you get bounce there. But at the moment, you've missed it. Stevie, with RSIs, are you using 68.32 or 75.25? So I never use and have never used 68.32. I don't. That basically those 68.32 RSI levels are, I think, Steve Malrose, or are they the defaults? I don't know. I don't know. I've never used. I think it's Steve. I think it's Steve Malraux. Basically, he's were the 68.32. I've never used them. I don't understand why you would use 68 and 32. What's the significance of the 68 and 32? It's just like, I know, let's use the 67 and 33. Why? It doesn't really matter, does it? Opening range breakout shorts is working. So yeah, I've always used 70-30 or higher, 75, 80, etc. So at the moment with H1, I'm using 75-25 because it's just that little bit stronger. If you look at the Euro New Zealand as a good example, actually, you had an entry there, which was this here, and it just did that. Then it pushed up again and did all this. Yeah, so that entry would have worked. You'd have got a trade out of it. When you get up to the 75, it's just that little bit more extended, and you tend to get that bigger pushback. So you got one there, look, 70, worked fine. That's a 75. Just trying to find a 70 to the downside. There was one, that would have worked as well. There's a 70 to the downside, that would have worked as well. That 70 to the downside would have worked. So I just, every now and again, you get a 70 which is just not quite far enough, and what it does is it hits the 70, accumulates, and then it pushes hard and goes up to above 80. So I've just found that the 75 is just that little one step better, and it's a little bit more reliable. 80 would be my ideal. I mean, if 80, you're not going to get hit as much on 80. Look, you would have missed an opportunity for that short there. You'd have missed an opportunity for that short there. But look at the 80s. Yeah, I mean, it very rarely fails the 80. It's personal preference. There's no, like I said in that video that I published this morning, or published yesterday and posted out this morning, it doesn't matter what you use. If nothing works at all, everything works all the time, doesn't it? So whether you use a 68, a 70, a 75, or an 80 is irrelevant. All that is the condition that you decide to take your signal from. How that trade pans out and works and whether it's profitable or not for you has got nothing to do with the level of the RSI. It's to do with how you manage the trade after you've entered into it. So whether you pick 68, 70, 75, or 80 is entirely up to you, or 90. Yeah, look at the 90 level. If you pick the 90, you only had one trade all year so far with 100% strike rate. It's no right or wrong. It's just more or less trades. That's all it is. So more aggressive. I get asked all the time about RSIs, and there is no right or wrong. The 14 or the 21, as you've just asked, Stevie, I just seen. Up to you. Use the 7 if you want. The 7 will get you in more than the 14, and the 14 will get you in more than the 21. But I usually use the 21 on the hourly and the 14 on the 4 hourly, purely because if you look at the difference between the two, right? So that hit there on 80, on 90. If you switch now over to a 21, yeah, you miss that signal completely. Yeah, so it says it's got to be a stronger move, and at the moment the market is contracted. We've got very, very, very small contracted ADRs at the minute. So you will find that if you use a 21 RSI, you'll get a lot less 70 extensions as well. So it gets harder to find opportunities. So at the moment, I've tuned it down to a 14 because we're in a tight range at the moment, or tight contracted trading conditions. When all of a sudden I go into silly drawdown and we start moving massively and wildly again, I will put that back up to a 14. Put it back up to a 21. You've got to just slightly adapt. But at the end of the day, it doesn't matter too much. Either way, it is personal preference. Everybody uses different targets, different entry criteria. Thanks. Just turn the lights off. What's my max loss on this? 5%. Oh, not 25 grand, 2,500. So yeah, it doesn't really matter. Either or. Okay, this might be a just watch the bootcamp question and is a newbie question. But without your ADR indicator, how can I tell where half an ADR is to set my TP? You can't. Is the honest answer? You can't. There are other ADR indicators out there that might display ADR. What you can do, one way you can do it is if you put the ATR on your chart and set it to ATR 10, yeah, and flick to the daily time frame, that will give you a reading. So, right, so my ADR indicator you can't see, but you can look on the dash actually, can't I? Yeah, so ADR on Euro New Zealand, the way that I calculate it is 159. Yeah, because I'm using the close of yesterday to calculate ADR. The ATR indicator includes today's candle. That's the difference. But the difference is going to be tiny. Yeah, so I'm calling 159 on Euro New Zealand. The ATR 10 daily is calling 152. Yeah. So there's hardly anything in it. So call it 150 is the ADR. Yeah. So half an ADR is 75. So you can just use ATR. All ADR is, literally all ADR is the ATR of the daily chart, isn't it? So ATR is the average true range of X number of candles back. ADR is the ATR of the daily time frame. It's the same thing, except I don't incorporate today's range into it, because what the ADR indicator and the ADR strategy and the dashboard is doing is it tells us when we've hit that. If that today's candle is taken into account, it's going to skew today's ADR figure out, isn't it? And every time you get bigger and bigger and bigger, it's going to go, well, ADR is rising, so I'm going to move that a bit further away, and and it makes it more difficult to hit. So just that's the reason it's not used. That's the reason it's only on closed candles only. But that's how you can calculate it using ATR. But there are other ADR indicators out there, but they don't work in the same way as my one does. But then that's not necessarily the be all and end all of it, is it? So, and they won't draw the ADR extensions on there. They won't alert you. But that's how you calculate it. Thomas, as a newbie to the stream, you haven't subscribed, Thomas. I'm not answering your question. I'm joking. As a newbie to the stream, I have heard a lot about prop firms. Surely, if you have a proven strategy earning 10% a month, why do you need to do them? Prop firms. So my proven strategy is position trading. You can position trade on prop, but it's very hard because you will have a maximum daily drawdown. Yeah. So as a position trader, you are always sitting in drawdown because drawdown is your risk. And if you don't have drawdown, you don't have risk. And if you don't have risk, you can't make money. So you're always sitting in drawdown. Prop firms only allow you to have 5% because obviously they don't want you to make money. I don't know, but they have a 5%. So it's more difficult to position trade on a prop. So prop firms, you either have to run a hybrid position trading strategy, or you have to use stops, traditional stops, and do it that way. So yeah. But prop, I use stop most of the time on prop, and I scale into winners basically to try and get money banked fast, which is obviously what everybody wants to do. So, but you can position trade on prop. Obviously, you've just got to be careful. So this set file that I'm managing, I'm developing here. What's the next 4-hour candle close? I need to check that. So this strategy that's in testing at the moment, obviously, is done 15% in the last 14. Well, since the 14th, it's done 15% profit. But you can see it's sitting in 5.1% of drawdown. Yeah, it's banked 0.39%, but pretty much that's a fail on prop. It's passed, no problem whatsoever. However, at the moment, it's failed. So with prop, the way that I personally use prop is I will trade prop, get an evaluation over the line into a funded account, and I'll do that with multiple accounts, and I will fail lots of accounts along the way. Yeah. So if I take sort of 10 evaluations, for example, I will only pass maybe 2 or 3 of those evaluations, sometimes 4 or 5. It depends how the market goes. It's nothing to do with me. It's down to whether the market moves the way I want it to when I press the buttons, isn't it? It's nothing, I can't control that bit. So I'll pass some of them, and my job basically is to get one of the accounts that I pass to a higher profit than I've spent on evaluations. So it's just a business, yeah? So think of an evaluation like a piece of stock. If you buy 10 items of stock and they're fruit, for example, you buy 10 pineapples, yeah? If you leave the pineapples and 7 of them rot and you can't sell them and you've got 3 left, what you've got to do is the profit on those 3 has got to outweigh the outlay of those 10 pineapples, right? Take 10 evaluations and spend $500 on them because they're 100K. You've spent $5,000. Get one evaluation over the line into a funded account and trade it up to $5,000. Yeah, stop trading, withdraw that, wait till payday, basically, which is usually 2 weeks. Yeah, and then as soon as you've taken that out, you've covered your costs, you then start trading that prop again. Trade it up to 3 to 5K, stop trading, draw the money out. Repeat, and do that until you blow it. Yeah. And when you blow that account, you restart the process. But if you're clever, you've got other accounts, evaluations running all the time. so that you're constantly having funded accounts. Yeah, I've got 2 Fidelcrest accounts running at the moment, because if one of these blows, the other one will probably pass, hopefully. But this is also part of my Forex funds, EA. There's loads of prop firms out there. You can use as many as you like. But what and again, it's covered in this video. Actually, it wasn't in that video I posted, was it? But we spent a lot of time yesterday or the day before, yesterday morning, wasn't it, talking about prop firms and the game that you play with them. And the game everybody plays wrong is they try to do a prop firm evaluation. So they'll spend $500 on it and expect to suddenly get funded with $100,000. Why on earth do you think you're going to spend $500 and someone's just going to give you 100K and you're going to become a professional trader? Ludicrous. It's not going to happen. It's just not going to happen. So you've got to play their game, and their game is spending money on evaluations. Their business model is evaluations, not funding traders. No trader holds their account for 3 months. A couple do, 1 in 1,000 maybe. But 90% of people fail their funded evaluation without ever getting paid. They get through 2 phases, luckily, and then they get the funded account and their luck runs out, because you can't stay within a 5% drawdown. There's very few, if any, traders. There are no traders. I can say hand on heart, there's no trader on the planet that has never had a drawdown of 5% on their account. It just doesn't happen. Professional traders will have bad days. They will lose max drawdown, whether it be the daily or the max account. They will hit that level because you can't control the market. If there's a big news spike and you're in 5 positions and all 5 of them hit loss, that's it. You've got to start again. They know that. And 85% of traders lose money trading. The statistics are all published by brokers. So if you know 85% of people can't trade on a broker, why on earth, when they go to high stakes trading, do you think they can suddenly become a good trader? You can't do it with your own account, your own money. Why do you think you can do it with someone else's? They know this, and this is their business model. So they put rules in place to make sure that they trip you up. Well, not trip you up, they just put rules in place that are within what they know are the parameters of all traders. Yeah. If they put me at a 10% daily drawdown limit, I would have 10 funded accounts running pretty much all the time, because I can stay within 10%, no problem. I can have aggressive drawdown control and normal drawdown control conditions, which will mean that I can control this way better within 10% if I wanted to. But I can't control it within 5 because the market will not allow it. Because market moves up and down, and the pure movement of market within outside of average daily range, unless you're using a very, very, very small risk of 0.1% or something per position, you are going to go outside of those criteria set by the prop firms. So that's why I have multiple prop firm evaluations running all the time, and I have multiple funded accounts running because I'm going to blow them. I don't know. It's on 2 hands the number of accounts I've blown without getting paid. 2 hands plus. But the ones I get over the line and I pass with outweigh the cost of doing them. That's the model. That's what you need to do, and in my opinion. But that's if you can do it. I haven't found anybody, right? I've been doing prop for 2 years, more than 2 years. I'm in Discord channels. I'm not in the Telegram groups anymore, to be honest, because the ones that run Telegram groups are rubbish. But I'm in Discord channels for funded traders. My Forex Funds has got a dedicated funded trader channel. I know by looking at the names in that channel, people last weeks, days. So they get funded. You get your little gold emblem next to your name because you're a funded trader, which you have to apply for to get them to upgrade you to a funded trader level. You don't see any names coming up in that channel the same very often because no one lasts. And those are the people that go, I've got my account. I've just gone long on US dollar yen. You never hear from them again. Because you can't hold a prop account because they will at some point over leverage. You're used to, and this is the thing, and again, I've said this so many times in here. To pass an evaluation on my Forex funds, for example, you've got 5-day minimum target and an 8% target on the account. Yeah. So what your psychology is programmed to do is to say, okay, I need to get 8% in 5 days. It's not, they give you 30 days, but your brain will be programmed to go, I need to get this over the line in 5 days, because if I can do that in 10 days, 2 stages, yeah, 2 phases, I could have $100,000 to trade with. So what you condition yourself to do is making 8% a week. Phase 1, 8% pass. Phase 2, you only actually need 4% or 5%, depending on who you're using in phase 2. But let's say you're only making 10% to 12% in 10 days. That's 20% a month. There isn't a trader who can sustain 20% a month consistently. I can do it, all right, but not consistently, because the market conditions are favorable at the moment, but they won't be favorable next week, next month, next quarter. I don't know. At some point they won't be favorable. So, you know, you're programming yourself to over leverage. So when you get your funded account, your expectation is, I'm going to make 12% a week, or 12% every 10 days, or 5% a week. Yeah. But what you should be saying is, I want to try and make 2% a week, because if 2% a week can be achieved, that's 8% a month. If you can't live on $8,000 a month, I don't know what's wrong with you. But if you only target 2% profit a week, that's less than 0.5% profit a day. Pretty much anybody can achieve that by using 0.25% risk on their account. Yeah. So if you, and this is all covered in the bootcamp, if you set yourself a target of 0.5% a day, that's 10% a month. Yeah. If you risked 0.25%, right, on one trade with a 1 ADR stop loss, and you targeted a 1 ADR TP, that's going to be very, very achievable if you use something like an RSI extension. If you do that 2 to 3 times a day, which is achievable, you know, putting a stop 1 ADR away, you're going to easily get 0.5%. It's very easy to get 0.5% a day without even thinking about it. But you don't do it because you condition yourself in the evaluation stage on prop to make 8% in 5 days, which is completely over leveraged. So they condition you to over leverage, which means as soon as you get the funded account, you get excited. The first trade goes wrong, you get panicked. And then you get panicked and you go, oh, I'm going to double this time, just get it. And then you panic again. And then it's literally, it's gone within days. That's what most people's experience is. They publish the results on my Forex funds. 85% of people who get a funded account blow it within a week, because their luck runs out. You can't be lucky all the time, can you? You're lucky enough to get through phase 1 and phase 2. You're lucky. 3 weeks on the trot is not normal, is it? Let's face it. ORB to the downside is working very well. So there's your entry. Stops up there. So we've got 1-to-1 at the moment. I shall hold on to that. Right. Sorry, that was a waffle. CAD Swiss. Someone wants to look at. So I'm short on CAD Swiss at the minute, off of an hourly RSI extension. So we've got this propulsion gap, which we have tested, and we are kind of testing again at the minute. But we've also got an upside target to aim for as well. So this is a tricky one at the minute. Swiss franc is very, very odd. And it's difficult to call. So usually the Swiss franc is a haven along with the yen when we have times of crisis. Obviously, we've had a banking crisis, and unfortunately, Credit Suisse was one of the banks. So the Swissy's been pretty weak. And at the moment, as you can see, it's kind of not really going anywhere. So there's not a massive amount of movement on this one. I took an RSI extension short on it here. We've gone sideways we're in day 3 now, going sideways. So I like it short. However, we've got news coming this afternoon, obviously on the Canadian dollar, so that could all change. But it's a short, basically. But you can see if you look at the fundamentals on it, CAD Swiss is a big sell. Yeah, there's no top positioning on it, but fundamentals are all short the CAD, long the Swiss, and retail at the moment are all longing CAD Swiss, so it's a short. So just hanging in there, basically waiting for that to drop. But there's no opportunities on it right now. We've missed them. You've missed it basically, but you're at entry point from that RSI extension on Tuesday. So in theory, you could get in, but we're pretty close to looking like we want to take a long, aren't we? So not really anything at the minute. Johannes, looks like a strong US dollar this morning. Yeah, well, the indices are coming down, so I would suspect so. Yeah. So they might be buying into the news this afternoon, expecting positive figures. Yeah, very strong, which is good. That's what I want. Mumo, I think I know where the 6832 came from. Likely your market reversal video, settings and ideas. Yeah, probably. Let's have a look at the TDI. Okay. TDI 6832. So the TDI, the reason I use RSI is because of the TDI. Yeah. So I fell into the exploring as a lot of people do. This is an indicator created by a guy called Dean Malone, and it was used by Steve Mauro, BTMM, Beat the Market Maker, as a core for his strategy for shark fins and that sort of stuff. So the Traders Dynamic Index basically is an amalgamation of multiple indicators on one chart. So you've got multiple moving averages, you've got Bollinger Bands within a line, and this yellow line is the core of the entire strategy. And guess what that yellow line is? Ta-da! It's an RSI 14 median. Yeah. So all the TDI is basically is an RSI with a load of crap stuck on top of it. So he's taken an RSI, he's put some levels on, which you normally have. He's stuck some Bollinger Bands outside of it and stuck two moving averages over the top of the RSI. So we're looking at a moving average of a relative strength index within a Bollinger Band extension. All of those indicators tell you pretty much the same thing. Pointless. So so he developed an indicator to do all of this stuff. So the 68 and 32 is the default levels for the TDI. Therefore, that's what I used on my RSI, I guess, initially. There you go. That's where it came from. But again, use like we've already discussed, but use a 68.32, use a 70.30. The difference between the 68.32 and the 70.30 is possibly maybe one or two signals a year that might not be the same. It's such an infinitesimally small difference. It's just not going to make the blindest bit of difference to you, is it? So use whatever you want. But the bigger the extension, the more stretched, the faster the snapback. That's the elastic band theory, isn't it? So there you go. That's where that came from. I'll be buying the ADR and the EA, but I'm brassic at the moment. I know, small violins. Okay, I can't do the music, but there's no rush. It's not going anywhere. The market will be here forever. Unless Putin decides to press the button, then obviously we won't be here anymore, so it doesn't matter. Then you won't have to worry about buying anything, so it doesn't matter either, does it? Thomas, I understand this, but why do you do them? Is it purely to increase your bank? Yeah. So I don't know too many people, Thomas, that have got 100 grand lying around that they can trade with. Do you? My personal trading account is not 100 grand. My personal trading account isn't even 50. So I need leverage. And that's prop. The only way you're going to get money is either to go to the bank and borrow some money, which I would not recommend doing at all. You only trade with money you can afford to lose. If my account went pop tomorrow, I'm still here. It would be quite a problem, but I would still be here. Yeah. If I borrowed 50 grand from the bank to do something and I used that for trading and blew that, I've got to pay that back over the next 5 or 10 years. So, you can only trade with money you can afford to lose. Prop gives you access to high volume of funds relatively quickly, but playing within their rules. Yeah. My rules allow me to make as much money as I want. Their rules allow me to make money when the conditions of the market allow me to make money with whatever strategy I'm using. That's the difference. And that's why it's, prop's more difficult, obviously. Morning, Robin. Is it possible to add a variable similar to close all win X money in profit? To use a percentage of balance? No point. Just make it your percentage of balance. It's exactly what I do. Look. So if you look at the H1 or the ADR set file, yeah, 100K account. Yeah, close all when in X profit at 250, 0.25%. So just put in there put in that box whatever a 0.25%, 0.5%, or whatever it was, percentage of your account you want to shut. And then if your account does grow by 10%, up that by 10% once every month. So it's pretty easy. That's exactly what that box is designed to do. I've had this conversation in here before. I could put another 25,000 inputs in the EA because everybody wants something ever so slightly different. But at the end of the day, the EA would never run. So it does what it does. You have to adapt to the EA rather than having the EA adapted to you, basically. So that's the way you do it. It's very simple to do, obviously. And the reason it's there, the reason these two boxes are there, and these are the ones that I use, is because if I get into one trade and it works, I want it to move a certain distance. If I get into multiple trades with different lot sizing, because I've done drawdown control and all scaled in, or a combination of both, it's going to be more difficult to reach that pip target. So I want to get out with a monetary amount instead. So either of those hit. This is the one that is used for multiple positions. This is the one that's used for straight in, straight out positions. So that's why they're there. But yeah, you could use a percentage of account as another input. But again, it's just adding input after input after input. Every input added to the EA adds code. Every add of code slows down the backtesting, which is incredibly slow as it is because there's over 40,000 lines of code in that EA. Your typical EA will have around about 1,000, 2,000. This is an incredibly complex EA with a huge amount of functionality, and it's just not possible to do more inputs. It is what it is. It's never changing. I'm never recoding anything in that at all, unless it breaks for some reason because MT4 decides to do something in their wisdom which breaks it, which is what MT5 does all the time, which is why I don't use it. There you go. Please, I subscribed 2 weeks ago and I'm only on day 3 of the bootcamp. I just wanted to know why you personally do prop firms. I have answered that. That was a joke, Thomas. That was a joke. I'm not answering your question because you haven't subscribed. And I have answered it now, haven't I? So there you go. Morning, Neo. You're late again. You're always late. Always. Afternoon. Morning, Miura. Rowan, I made a RSI EMA indicator that converts the RSI values into EMAs. Well, you could have just used the TDI because that pretty much does that. And the TDI looks, I mean, it's don't go down the route of in this, by the way. Yeah. Oh, sorry, RSI default is 13, not 14. Sorry. So there you go. So there, the RSI period is that. Default is closed. However, it's not. It's median. The RSI close, if you put an RSI 13 close, and you'll find it be actually different. But, yeah. But don't go down the route of trying to use this thing. It's the same as everything else. It just is an absolutely overcomplicated mess of stuff that has the same strike rate as everything else. It doesn't help you pick targets. It's it's not very good at finding bottoms. It gets you into trades too late. It's just don't. I've been there. I spent a year and a half with TDI and BTMM, and I actually did get some decent progress with BTMM, but like everything, it just had losing runs which were astronomical, as all strategies do, because it just doesn't work in certain market conditions. Yeah, there's no strategy that works in all market conditions. So like all these overcomplicated strategies, like the ICT stuff, the BTMM stuff, the TDI, any strategy that is dependent on multiple indicators often has more than one indicator that tells you the same condition, which is useless, obviously, because it can contradict itself, or it's just telling you the same thing twice, which is again useless. And they're all designed to do mean reversion trading or trend trading, which will fail X% of the time when market conditions are wrong. So if you've got something that goes into a trend and you're using a mean reversion strategy on it, if that thing trends for an entire year, you will lose for an entire year. They just don't work, do they? In the same way as if you're using a mean reversion strategy and something doesn't mean revert, you know what I'm saying. You have to use a combination of everything, and that's why position trading works. It's because we're not using a strategy, we're using market cycles. You know, you can hit the button whenever you like, you will get out of that position. Doesn't matter, does it? Just go long now on your US dollar if you want. It's coming down, it'll go up at some point, get out. There's no strategy involved, is it? Which is what that video was about yesterday, which was like so good when I wanted to post it, because everyone's trying to find the Holy Grail and it doesn't exist. Soiful. We're just putting back on the DAX. Watch this level here. We've come out of that propulsion again. Been watching your live sessions. Hardly comment as I'm watching from Android TV. You can't write comments, only likes. Don't forget to do that, by the way. Hit the thumbs up button. Going through Bootcamp before purchasing the Indicators EA is cool. Do the Bootcamp. Make sure you fully understand everything and what it's all doing first. Tony, morning. Any thoughts on the German news? It was negative. German news? What's the German news? Oh. Well, it's 0.1, isn't it? So it's, yeah, I wouldn't say that's dramatic, to be honest. So yeah, I mean, it's negative euro, isn't it? If anything. But it's not, that isn't actually red news. Is that marked as red news in, yeah, they do mark it as red news. It's only part of the European unemployment rate. So if you look at the fundamentals, hello, there we go. If you look at the fundamentals for the Eurozone, and the unemployment, it's 6.7%, and it's flat at the moment on the last update. So this is a combined unemployment rate for the entire zone, and obviously Germany and France are the main countries, the biggest economies, the biggest contributors to everything. So if it's gone up by 0.1, that's obviously going to be negative for euro. They have said that they're going to increase interest rates again anyway, which will have a negative impact on unemployment. So I'm not surprised unemployment is going up, and I don't think they will be either, because they're putting interest rates up, and interest rate changes increases unemployment. So I don't think it's going to make a lot of difference, to be honest. And it is only a 0.1. If it was something like if this came out as a 6 or something, then yeah, the euro would be collapsing. So yeah, I don't think it's going to make any difference today. It's only part of the trouble with the euro is obviously it's unlike any other currency in the fact that there's a lot of economies and a lot of different countries that make up the eurozone and the euro in itself, whereas everything else is one economy. So you've got to take the German and French into account for the majority of the euro movement, but obviously they've got the Swiss banking system and stuff in there as well, haven't they? So a lot of the money goes through the Swiss banking system. It's all interlinked, but I don't know. Don't think it'll make any difference. Emmett, to use indicators or only price action? Indicators and price action, basically. Go and watch the bootcamp, Emmett. It's all on the website. There's links flying past below. Look. Go and watch the bootcamp. You'll figure out how I trade. But basically, I position trade mean reversion. Rowan, I've read Bill Williams' stuff. Fractals are pretty useful. Very different to position trading. Well, position trading is a methodology. Fractals are a signal. Nothing to do with it, position trading, really. Fractals, if you put a fractal on a chart, you will find a lot of fractals will arrive when reversal alerts arrive. Look, there's one there. So all a fractal is a turn, basically, in the market. Look. It's basically like a handbrake turn. But the problem with fractals is, obviously, and this is the problem with all signal indicators, they're useless on their own, absolutely useless, because they are a signal indicator, and a signal indicator is no use to anybody unless there is a market condition indicator to back up the signal. So on its own, I've looked into fractals a lot, and as you can see, you're going to get 1,000 signals a day on all time frames. You go down to M5 and look at fractals on M5. It's basically it's just fractals all the time. It's useless. It's the other reason it's not useless, but there you go. There's a fractal. There's a reversal alert. The other reason it's not very helpful for scalping a lot of the time is because it's a 3-bar pattern. So you have to have this candle after the candle the fractal appears on completely formed and closed. And what a lot of the time you will find is by the time you get that signal, the move's gone without you. So here, you can't see that one. But anyway, yes. Like I said in my video, everything works sometimes and everything fails sometimes. Nothing works really at all, does it? Because the market will just do whatever the hell the market wants to do, and whether you've got a fractal on there or a market reversal alert indicator on there, an RSI, an ADR, a moving average, anything that draws an arrow on the chart has got nothing to do with what the bank's going to do next. So technical analysis is utterly useless when it fails. So you've got to use something, basically, was my message, wasn't it? everything fails, but you've got to use something. I use this. If you don't want to use this and you want to use a stochastic, no problem. All oscillators go up and down. They give you a market condition. So anything you use is good. So you could build a strategy using stochastics with fractals. Yeah. So when stochastic RSI or stochastic is extended and you get a fractal, short it. It's got exactly the same odds of working as RSI and reversal alert, isn't it? Market's either going to go down after you hit that button or it's going to go up. So obviously the difficulty with fractals is when do you get out? And you know, let's say for example you took this signal fractal here, so you would be on that candle, you would have taken a break of the low there. Yeah, what do you do here? You've got a signal to go long. Yeah, so do you get out of that short and go long? And if so, what do you do there? You've had a signal to go short. So what do? Go short and get out of that long. Yeah, that's fine. So then what do you do now? Go long again? And now you're going to go short there. Do you see what you've made here? Absolutely nothing. Because all that's happened since you got into that trade is it's gone sideways, which is why it's given you a load of fractals. Points. Hopefully I'm hammering this point home enough. It was a really good session yesterday because all we were talking about was, all we were doing basically was slagging off the market. Slagging off everything in trading because it's all a load of rubbish. Curious, what percentage have you banked on ORB DAX today? I haven't banked anything on ORB DAX today. Nothing. Still in. I'm not out yet. Still in. That's entry there. I'm miles away. I really want to try and record it. However, trying to find time to get it together is just proving impossible. And also, I'm really struggling to get 12 odd hours of content into half an hour in a logical, sensible video that kind of works. So I'm struggling. I think it might have to be an hour boot camp, to be honest. So yeah, no, it's not published. It's not recorded. I haven't even done a run through on it. I haven't had time to get the PDF. So the PDF is down now to 84 pages. It was 180 odd to start with or something. So there's a lot of work to be done on that. But yeah, you've obviously done the boot camp, haven't you? So just stick with the boot camp for the minute. That's the proper version. Rowan, I use them in a way where I use fractal breakouts. So if momentum shifts, a higher low is present, I'll take a breakout, then close when price drops below a 7-period smoothed moving average. Cool. If it works for you, carry on doing it. Right, I haven't got anything else to cover today. It's 9:15. I've only been on for an hour and 25. This is weird, isn't it? Normally I'm 3 hours into a session and I can't shut up, but we haven't got many people asking questions in here today. So, and the market, basically the analysis is all kind of done because there's no ADRs. Weeklies were on Friday, so they're all valid, obviously, but they're all playing out. And the RSIs are all basically, to a certain extent, yen based, and we know what's going on with all the yens. So everything's kind of just sitting there doing its thing at the moment, but it's pulling back a little bit on the yen at the moment. So so that's really all I've got for you today. The DAX trade obviously is just on at the minute, short. So we've got lots of downside momentum on the DAX potentially. The only thing I haven't covered today is oil. Well, that's not gone anywhere, is it? So the DAX, basically, I'm looking for gap fills, looking for this gap fill, basically, which is 150 ADR. If we get a massive, strong push on the US, there is a possibility we might get down there, but I don't think we will. So that'll be next week. We may well get down to yesterday's low. So that would be initial target on this trade, down to yesterday's low, which I think is what I've got targeted. No, I haven't. I'm going for the gap filler. Yeah. What I might do, excuse me, is actually, I'm going to take half off at yesterday's low. And the second TP, I will go for the proper gap fill. Which is somewhere down there. So basically that is, what, 1.4, 2.5 grand. Target is 5. So that'd be half target done if that plays out. I'll leave that running. Would be nice. Yeah, so oil I was going to cover, sorry. So oil, I'm looking for this pullback, which we haven't got yet. So peak formation low there, push, lower high, sorry, higher low, higher high, looking for a higher low to be put in. All we did yesterday, so initial trade was there, exit. So I'm looking for a pullback to re-enter. All we did yesterday was kind of rally, but only up to the high of the previous day. So we've basically gone, if you like, 3 days. We haven't gone anywhere. Today, we haven't gone anywhere either. So I'm looking for a big, strong push down on oil to try and get a long position on. Hopefully, at some point today, we'll get a decent drop. But if not, then I'm just going to leave it. I'm not going to try and jump on a breakout of this. I need some kind of pullback, some extension, so that we know we've got a good chance of a rally starting. And obviously assuming that we're going to continue this way. The reason I'm not too keen to get in on a long until we've pulled back is obviously the trend is massively short. So I'm looking basically to try and catch the start of this trend back up to $80, $90 a barrel. But I don't want to jump in long just in case we are going to pull back for some reason. We are going to drop back below down to $60 a barrel, which I can't see happening, but we will see. So watching and monitoring that today, that's one I'll take on Feudal Crest as well. So if we get down on oil, I will jump in on oil. It's difficult to pick a spot though on this at the minute. Why is that? Excuse me. Where's my fib? Oh, that's a good fib, isn't it? You can really see that. So 38 is 100 ADR. 50, 61.8 is sort of around about 150, 175. So any kind of pullback to ADR or below, I'll be interested in, and I'll just drop down and take the next reversal alert long on 5 minute basically. So, but it's got a long way to go. Look, it's a real long drop ahead of us. So I'm not sure I'm going to get in on that today, but we will see. ADR, we've had an ADR. Look, Aussie dollar, US dollar. First ADR of the day. So that is a really strong US dollar we've got. We've also got a weak Australian dollar as well. Look, that's why that's coming down so hard, because we've got a weak Aussie, strong US at the same time. So quite fancy that short, to be honest. So I'm not sure I'd really want to long that, but it's really range bound. So you could long that. If you look at the bias on it, it's a sell at the moment. There's no retail bias, cut or short, fundamentals are neutral. So either way, Paul, for yourself, when you make it to live prop, do you treat the drawdown as a full account? Yes. It's a 12K account, basically, yeah. Well, it's a combination, basically. It depends. So when you get, obviously, if you're in a 100K account, as you say, and you've got 12% of drawdown available, you're basically trading a 12K account. So if you're going to risk 1% per trade, yeah, you need to risk 1% of 12K, not 1% of 100K. And that's the difficulty. The difference is everybody goes in with a $1,000 risk on their trades because they think they're trading a 100K account. You're not. You're trading a 12K account. Your risk should be $120 per trade. Yeah. So if you want to keep accounts and you want to position trade, that's what you need to be doing. However, if you're scalping and you want to be aggressive, obviously, and get 1 or 2 trades in to get that proper valuation money back, go aggressive. It's a mix, really, depending on how my day, week, or month is going as to how I will treat an account. If I'm struggling, then I will be less aggressive because I need to obviously keep myself in the game longer, really. It all depends on the market conditions. So there's no real answer to that. You can do either or. If you're scalping, then typically you will be in with more aggressive positions. If you're swing trading or taking normal sort of stop-based trades like this one on DAX, then I would typically be less aggressive if I'm using like a decent size stop. So I mean, the stop loss on this is 57, so it's around about a quarter of an ADR. So this is a scalp. If I was using half an ADR, sort of 150 plus pips, then I would go in with a little bit more risk on it probably. But there's no real answer to that. It's how does the market look? If we're massively extended on RSI, for example, yeah, like we are here, I'm thinking, well, there's a lot less chance of a rally on this, so I'll get in a bit more aggressive. If I saw a nice short breakout that I thought, yeah, that looks pretty good, and we're sitting midline on the RSI on the hourly, it's a 50-50 shot. So I would go in with less risk. So my risk is based on how good that opportunity is as well. It's based on a lot of stuff. There's no I do this when that happens. I get in with what I think looks good, and I'll push a position like this. Yeah, so I've got sell stop sitting underneath the reversal alert. So initial entry is on that propulsion bounce. If we get the reversal alert in, I'm going to add. Yeah, so I'm doubling my risk. In fact, I'm more than doubling my risk on this one. That's an aggressive trade. I'm looking for a 2.5% return because it's an evaluation. If that was a live account, what I probably wouldn't do is going with such a large lot size on that. I'd take a 50% add-on and then have my stop in the same place, which means that my risk is doubled rather than, in this case, trebled, because I've taken the same lot size, 4.3, on both of these positions, except the stop on this one is twice as wide as the stop on that one. Yeah, so this is an aggressive entry. I could always pull my stop down to break even, but you know what happens when you go break even? You will break even. And I don't want to do that. So, but yeah, you're totally right. That people don't look at it in that way, and you should do. So you need to treat it. I mean, in theory, what you should be doing on an intraday basis, you should be treating your account as if it's a 5% account. So if you're trading a 100K account on evaluation or on funded, your daily drawdown is 5%. So if you're intraday trading, you're scalping, or you're trading small time frames like M15, or maybe even hourly as well sometimes, what you should be doing is playing it like a 5K account, but saying I'm going to risk all or nothing on it. My job is to double this 5k account. So you want to try and compound it, don't you, really? Which means you would use high risk. You would go in with something like 10% to 20% per trade. If you're compounding and trying to double an account fast, that's what you're going to do. So if you've got a 5% daily allocation, that's 5k, obviously. 10% of 5k is $500. So risk per trade should be $500, which is 0.5%. There's all sorts of ways to look at it, but the key to prop, there's two ways to play prop. The aggressive all in, and like I said in the video yesterday, I passed E8, both evaluations on E8. So E8 don't have a time limit. So I passed the phase 1 evaluation in the morning, and I passed the phase 2 evaluation in the afternoon. I did it by taking one trade. I went short or long. I went long on the DAX in the morning, and basically took a 1% risk on the initial position, pulled back, added, got out, closed it. Thank you very much. Phase 1 passed. And in the afternoon, I traded the NASDAQ short, did the same thing. The only reason that worked was because I was lucky enough to pick the direction correctly, and we had a trend day that day. If we'd have had a rotational day or a range band day, I would have blown the accounts. However, if I'd have got in with a 0.5% risk on the trades, I probably would have had 3 or 4 entries and gone, this isn't working, and walked away with a 1.5% loss on the account. So that's the way you should trade it. That's what they're looking for, is responsible trading. And if you trade responsibly and you've got a decent strike rate, you'll be all right. But if you position trade with very small risk, there's a good chance you'll pass that as well, that way. It will take 2 weeks or 3 weeks to pass, though. And this is the difficulty, isn't it? Everyone wants to pass it fast. So if you're going to pass it fast, what do you got to do? Take high risk. There's no simple way to do it. Sometimes it works, sometimes it doesn't. I've done evaluations on E8 where I've taken 3 evaluations in a day, and I've failed, and I've failed, and I've passed. And it's literally a case of aggressive going in, scalping. No, crap, that was a bad hour, wasn't it? Next. This is going okay. No, it's not. No, it is. No, it isn't. And then end of the day, I'm like 4.5 grand down, and I go, oh, screw it. 500 long, blown it. Next. But if you do that 3 times and you spend $1,500, when you do get the funded account and take one trade with 1% risk and it goes to a 2R, you've just made $500. You got your money back. Stop, pull the money out, back to phase 1, or back to start trading it again, and then reduce your risk and just go for 5% a month. If you get 5% a month on a 100k account, it's 5 grand. You're getting 80% of that. It's a lot of money. It's 4 grand. That's all you need. Most people can survive on that. You've just got to know how to play the game. That's the difference. And there's no right or wrong. There's multiple ways to do it. But it's personal preference, and it's down to you and how you feel that day, and how the market goes. If this DAX comes down today, it's not. I've just stopped out break even, so I'm flat. So I didn't make any money on this today. I'm flat, break even. Yeah, I mean, but if this had done this today for the whole session until New York, and if I took a 2.5% risk on that opening range break, and this moved 3R, passed, haven't I? In one trade in the morning, and now I can do the NASDAQ this afternoon. So it's what this does that has the bearing on whether you pass or fail the evaluation, 100%. Because when you press the button every time, it will go up or down. That's all you know. You can't control what this does, and this will either pay you or it won't pay you. That's the bit people don't get. And it doesn't matter how you adjust your risk in a prop account or in your own account. That's the odds every time you press the button. And if you press short now, there's a good chance that we're going to see a market structure break to the downside, I would say, today. Yeah, so we've got a high, a low, lower high. Yeah, looking for a gap fill. But if you press the button short now, who's in control of whether or not you make money today? The banks, not you. You can't control whether or not this trade works or not. So it's all luck. If you're over leveraging and risking high. If you're not risking high and you're going in with like $250 risk on that on a 10K or 100K account, doesn't matter, does it? Or just don't use a stop and scale in again a bit further up. And maybe shut the whole thing if you get to $1,000 in loss. But take small positions and just make sure you win more often. That's the key, winning more often. And that's what not using the stops does, is it massively increases your strike rate because you just wait for the market to go in your favor because you can't control that. This thing will go down. The DAX is going to come down. I can guarantee at some point in the next 48 hours, this will be trading down here somewhere. Yeah, I don't know 100%, but I'm 90% sure that's going to happen. So if I take a short here with a stop loss there, all I'm doing is if the market decides to push higher, I'm telling it to take my money away. If I don't put a stop there, I just wait for it to get down to there and then I close the position, I win. But you can only do that if you're not risking a stupid percentage on every trade. If you risk 0.25% of your account on a movement of half an ADR and it goes 1 ADR against you, you're in 1% of drawdown. Sorry, 0.5% of drawdown, aren't you? It's not the end of the world, is it? Let's let it go another ADR and we'll go 1% in drawdown. And then on Tuesday next week, when it comes back down to here, we'll close it out with a profit. Does it matter what the profit is? Not really. It matters that we make a profit. But that's the difficulty with prop and position trading, is you only got a 5% variance to work within. Whereas on my own accounts, I've got 100% variance to work with, which is a big difference. How are you able to stay longer in ORB trades, stop loss or TP settings? My demo ORB DAX doesn't go past 1 hour. What? Don't understand that, Mumo. What do you mean it doesn't go past an hour? You've got it set to close your trades, have you? So you've basically set it up. So you've set it to close all trades at stop trading time. Yeah. So you've got that set to an hour, have you, after the opening range, and you've set it to close the trades? Well, yeah, if you do that, it's going to close your trades, isn't it? Am I confusing your question? I don't know. But if you set that to close your trades after an hour, it will close your trades after an hour. So if you don't want to close your trades after an hour and you want to stay in the market longer, set that to false and it will just stay in the trades. Yeah. I've stopped out on a trading stop on this. And it's probably going to go down now because that's what stop losses do, don't they? They take you out of the market. We started calling them stop profits because that's what they are. If you put a trailing stop in the market, it will stop your profit because it will hit your trailer and then it will carry on. Stops. I'm not going to labour the point. You know my feelings on stops. Which window do you check market sentiment? So that's on the website. Again, all going along the bottom there. There's links under there at the bottom here right now to the fundamental section. There you go. It's coming on now, look. The mst.info/fundamentals. Morning from Tulsa. Morning, Brian. Nearly called you Byron then. That's completely logical. Yeah, I am logical. If Velocrest is doing a 2-to-1, why not do one account one direction and the other account the opposite direction? Same trade, because it's against their terms of conditions. You're not allowed. That's basically called cheating. They don't like cheats. But what you can do is do that on two different accounts. So take one with Feudal Crest long, take one with E8 or My Forex Funds short, using the same risk. Hopefully one of them will go to target. What can happen is both of them hit stop, because your target is 8%, your stop is 5%. So you'd have to be lucky on the Feudal Crest one really to pass that way. But you could do it on, yeah, I don't know. That's not trading, is it? That's basically gaming the system. I have a lot of people contact me to manage their accounts for them. And when I say, why do you need your account managed? They say, I've passed prop. And I'm like, well, why do you need me then? I had an EA and I paid someone to pass for me. Well done. So now you are a pilot in charge of a plane, but you've had no instruction on how to fly the thing. Good luck landing. Yeah. If you cheat in prop to get past, and there are ways to cheat in prop to get past, what are you going to do when you get your funded account? Blow it, because you don't know how to trade. If you knew how to trade, you would be able to pass the prop evaluation, wouldn't you? So there's no point in trying to cheat. Just no point. All you're going to do is you're going to get hold of an account, you're going to lose it, and it's going to frustrate you. And just try and do it the right way. The account using on the EA, are all the pairs spread 5 or below? I don't know. No. Well, it depends what you call 5. Pound odd is 222, but I call that 2.2 pips. So yeah, 2.2. Yeah, everything's below 5. I mean, if you've got a broker that's got more than 5 pips spread, change broker. There's absolutely no reason to have a 5 pip spread in this day and age. 2 pip spread really is like big, and that would be on something like Pound New Zealand. You shouldn't have high spreads over 5. Kennelly, I keep getting this alert, but I can't trace where the EA, where on the EA it is. Pound US dollar profit. So that's not the EA, Kennelly. That is your dashboard. That is your trade manager dashboard, and it's this alert here. No, it's not. It's this alert here. Individual trade profit alert. Yeah, so it's your trade manager dashboard. So either set that to something reasonable or turn the alert off. Turn sound alerts off. Morning, Baggy. Morning, all. Morning, Michael. What's your view on pound yen? Pound yen is a short at the moment. Well, it was a short, very extended. I'm still in short. So we've just broken out of this resistance. We've filled the initial safe haven run gap, and we're pushing back up into this massive propulsion gap here, which is a bit of an older one, which we've actually found some sellers at. So one of two things: either this propulsion gap is going to hold and we're going to have a profit take back down into this area or this area. I mean, it's likely to come back down here at some point, but obviously, you might be talking weeks away for that move. But this on a pullback I see is very achievable. 175 ADR, not obviously in one day, but at some point in the next week. So either that's going to pull out of there, or we're going to push up and we're going to do some kind of resistance bounce, limit order triggers up there, or just above it to do a sort of run of liquidity if there is any there, and hit ADR and then come down from there. If we get back up to ADR, we're extended again. If we get an extended condition like that where we're embedded, which doesn't happen very often, but it will get to the point where it will suddenly just pop back down again. So we haven't had a profit take. If you look at it, this entire move from Friday last week to where we are now, There's not been a profit take on the whole thing. Yeah. So we pushed, accumulated, pushed, accumulated, pushed. We haven't profit taken at all. So I'm short waiting for them to do the move basically. But it's not in a minute. Yen's weak still. It's shown signs of strength this morning. Look at the US dollar one, but it's weakening a little bit more now. Look, all the yen's pushing back up again. So yen's weakening again. So it might do another leg. Don't know. But we know where we're going if we do go up. Euro US dollar hit TP on your short. I'm sure it's going to go lower, probably. If you've got out, that's usually what happens. I'm still in at the moment on the short. TP is 46. Yeah, so basically my TP is going to be bottom of the support rectangle on that. There. Nice big drop. Afternoon, George. No, evening for George, isn't it, in Sydney? Morning. Morning, Gordy. Michael, have you tested when scaling in double your lot size and your average gets really close and you need a small move to get out? Yeah, that's martingale, Michael. Don't use martingale. I mean, you can do. Obviously you can do, but most prop firms ban it. You're not allowed to do martingale for a good reason. 100% guarantee you will blow your account if you use martingale. There is no one on the planet ever that has done martingale and is still alive. It just doesn't work. So don't do it. You can do it short term if you want to, but stop. But the trouble is, if you do it and it works, you won't stop. And then the only time you will stop is when you blow your account. You can't do martingale. It's too dangerous. You will get squeezed at some point, and that'll be it. There's a bit in the bootcamp about martingale, actually. It's on day 5, I think. Why is my website so slow today? Hello? Wow, website's gone into super slow mode for some reason. Okay. Oh, someone is selling a crypto results course. Courses.crypto results. Some young bloke. There's a bloke, yeah. From a it's difficult to tell these days, isn't it? From his loft, who hasn't been alive long enough to understand anything, selling a course, which is the same as another course you've already bought. Somewhere in here. This is the wrong day. I'm going to check my links. That went to the wrong day, didn't it? Anyway, there is a bit. I'm just trying to find it. No, sorry, it's not in that day. It's in day 4. Sorry. In here. Martingale is in here somewhere. Here we go. There you go. So it's 2 hours. There you go. It's 2 hours 21 into day 4, where I basically tell you not to do it. But if you want to know why, that will tell you that part of the course. Yeah, this is a good bit. Actually. This really explains. If you don't know about martingale and you're experimenting or looking to experiment it with the first time, this explains it very well. If you took 8 trades in a position, you'd be trading 5.1 lots using martingale, because you would go a 0.2, 4, 8, 16, 32, 64, 128, 256. It's 5.1 lots. You started with 0.02. With 8 positions, you're on 5.1. But if you use a hybrid strategy, yeah, like a 1.3 multiplier, which is what I use on some of my set files, you will, after 8 positions, only be in 0.58 lots instead of 5.1. Massive difference. Hybrid martingale, as I call it here. But it will keep your average price well within an ADR much more efficiently for you. And it's not going nuts. So as long as you're scaling out on these positions, this is, I mean, to get into 8 positions, it's a big squeeze. So you will be scaling out of these positions anyway along the way. But yeah, it's all explained in there. There you go. I have to check those links for some reason. There's day 5, yeah. When I clicked on that, don't know, something went wrong there. Maybe it's me. Sleep deprivation. I've got no idea what I'm doing. I don't know how to operate buttons today. Sorry. I'm trying to decide on which my Forex funds evaluation package to choose. How much daily drawdown would be reasonable or better to use with the ORB or MRA EA? So you want to use the biggest drawdown you can possibly get. So there are statistics on proper valuations, and I can attest to this. The reason I only ever do 50k and 100k evaluations is because anything smaller than that, you will hit your drawdown, because psychologically you won't want to, like a 10k account. I did a 10k evaluation with Fidelcrest first time round, and I passed it really fairly easily. It's $500. But it's no use to me, $500. Yeah, it's absolutely no use. If I'm not earning 6 figures, I'm not interested. So you've got to basically go with a big size, because you're going to need that drawdown. Whether you're using your stop loss or not, you are going to have either a losing run or experience a 3 or 4 position move within a position trade, which means you're going to need that drawdown. Yeah, so the higher, the bigger the count, the better. The longer you will survive in it, but still keep your risk small. Like we were talking about earlier, if you're taking a 100k account evaluation, you're trading a 12k account there. Yeah, that's the way you got to look at it. So your risk should be based on 12k, not 100k, or base it on 50k, whatever, you know. So just make sure your risk is not on that account size that you're trading. Reduce it, and you'll survive. But the bigger the better. Apex, I think it was Apex off the top of my head, but Apex, who is a futures account that I used to trade with, futures prop company, they published no, it wasn't, it was funded, no, it wasn't, it was the other one. It's the one that's on the website. I can't remember the name of them now. My brain is absolutely backfiring today. Take Profit Trader. So they published a white paper on evaluation statistics, and basically the largest number of evaluation passes were on their top tier accounts. The highest number of failures were on the low tier accounts. And you could say, well, that's because the guys that know what they're doing go for the big accounts. What it is the guys that know what they're doing know that they're going to need a lot of drawdown. So that's why they go for the big accounts. They don't need to have the big accounts because they need to earn a fortune. You can earn a really very good salary out of a 50k account, but what they do need is the drawdown. So you can go a little bit aggressive to start with if you want to try and get the evaluation over the line, But if you scale it back when you get the account, that drawdown will be a massive buffer. You know, so like say if you're going to start trading with a 10K account, you trade that a 10K account as if you're going to blow it. So it's all or nothing on a 10K account, but you can't go all or nothing on a 100K account. But on a 100K account, you go all or nothing on 12% of it, which is your drawdown limit. You're trading a 12K account. So you just look at it that way. So the bigger, the better. If you go with a 250K account, yeah, you got 30K a drawdown to play with. So you can live on that, easy. But it will take you a while. And then what you've got to do is get that balance right between passing it within 30 days and not going too small that you can't do that. Yeah, I mean, look at the account at the minute here, which is on 16 grand. That's in this month. 8% is a pass, so that's a double pass there. But it's taken a month. So best case scenario, it takes 2 weeks to pass. You've got a 5-day, or if you're trading EA, 1 day target, or minimum if you like, but that becomes your target, doesn't it? Always. If you forget that and concentrate on 30 days and what you need to do in 30 days to get over the evaluation, if you think about it, you've got to do 8% in 30 days, which is 20 trading days. That's your target per day, 0.4%. So what type of risks do you need on to make 0.4% a day? 0.2, maybe 0.15. Realistically, that's going to be a walk in the park. 0.15 risk to make 0.4. Easy. Half an ADR targets. It's exactly what this is doing here. But just don't over leverage it. But the more you have, the more room you have, the easier it will be. And if you don't hit target, you don't hit target. You get a free retest. And then you can, next time you can just up the target. Or what I've done before with position trading, and this is why I fell foul on Fidelcrest, was start the evaluation, start trading, see how it goes. If you're a little bit behind, up your risk by 0.1%. Try and catch up. But don't go nuts. This is what everyone does wrong. They just go nuts and they go for it, which is great. You can do that. But just your failure rate's going to be up there somewhere, isn't it? It's going to cost you more money to get through. Time. Everybody's impatient. I totally get it, but it's what kills everyone. Afternoon, Derp. Morning, even. What's my view on gold? That's my view on gold. John Wick wearing a gold suit. I haven't done gold today, have I? I've got to do it. We're still in the symmetrical triangle situation at the minute. I'm not sure. I don't trade this at all. I would be looking for short orders just because all the targets is the downside. And we've had a big push during the safe haven run. Obviously, all the money goes into gold on the safe haven. However, this is a US dollar cross. If the US dollar powers up, this is coming down. If the US dollar drops, this is going up. If it's going up, it's going to break out that symmetrical triangle. You'll be looking for somewhere up here for shorts and somewhere down here potentially for support. Yeah. So if you look at it, as always, it's within an ADR, roughly. That's outside of ADR, to be fair. But I'll be looking for shorts. We just had a reversal on the hourly. We've got strong US dollar today. Pop down. If you want to take an intraday, target that. That's nice and easy to get to. Drop down, M15, M5. You just had a reversal alert. M5, you had one earlier. But I'd be looking short today. Just came in to give me a like. Oh, that's nice, Derp. Thank you for that. Yarp. Yeah, can we have some more? Anybody else that's got a thumb available, if you could just press it, that'd be lovely. Not like that, on the button. Have you tested hedging from reversal signal to reversal signal? No. That wouldn't be hedging, would it? If you were trading from reversal signal to reversal signal, that would be an exit in profit, and that would be a flip, or what's called a stop and reverse strategy. So that if you were trading reversal alert to reversal alert, that's a stop and reverse. It's an always in system, and you basically stop and reverse on structure breaks. I haven't tested it. I probably have tested it at some point in the past. Let's test it. Let's just go with half an ADR. The risk off of 1%. Yeah, let's go mental. Let's go mental. Let's do it with the 100K account. So we basically want stop and reverse, don't we? Trade both directions, and we will get out on the opposite entry. And use a fake stop loss. We won't do drawdown control. We won't do any targeting. Distance between trades is irrelevant. That should be it. Let's give it a go, shall we? Let's do it visual. There we go. In, out, in. Out, in. Massive drawdown. Not position trading. Out. In. Why am I not getting out? Don't know what that's doing. You kind of need to do this as a position trade, don't you? But then you need an exit. I don't know how this would work, to be honest. Oh yeah, because we're getting out on the opposite signal, aren't we? Yeah, of course. Yeah. So yeah, no, this wouldn't work. It would only work, obviously, if you go into profit. So it would be. You would probably need to use this as a stop loss based strategy. And obviously then you're just going to lose a load of money. Don't know. One to test. I've not done a test like that before. Not really on my radar, that sort of trading. DAX is just back up inside opening range again. No movement today. We've got news. Oh, it just hit literally just now. Just going to say we've got news just about to land, which is the Euro news. So let's have a look at what that is. That's CPIs for the Eurozone. It's a miss. Negative. Interesting. Year on year this is. So we might get some downward movement on the Euro, which would mean bullish index, but we'll see. Not really any reaction to it. Euro yen short, yep. All yens at the moment are extended, so shorts. Euro is actually not reacting very happily to that, is it? At all. Let's leave that running. I'll leave it running. What's your entry on pound yen? My average is 164.272. I'm a bit lost in the prop DD concept. If daily drawdown is 5%, size of the account is 5K or 50K. doesn't make a difference. So if you're trading a 50K, let's say, let's simplify it. You're trading 100K. So let's say you buy 100K evaluation, right? For $500. Yeah. If you risk 1% on a trade, you're risking $1,000. Okay. But the maximum you can lose on your account is 12,000. So what that actually is nearly 10% of your maximum drawdown in one trade. Would you ever risk 10% of your balance? So let's say you went out today and you went to the bank, draw a load of money, and you stick it in a broker, 10 grand. Would you ever go and risk 10% of that on the very first trade you took? If the answer is no, what you're doing when you risk 1% on a trade on a $100,000 account is you're doing exactly that, because you can only lose 12 grand. That is your account balance, 12K. Because when you lose that, you're out of the job, you're out of the game. You've got no capital. That's it. You've blown it. You're off. So you need to adjust your risk based on this if you want to manage risk properly. Now, that's the question, this is the argument, isn't it? With prop, we've got to pass a target, which is, in this case, 8%. So they're asking us to make $8,000 on a $12,000 risk. So what they're asking us to do is pretty much double our account. So again, if you had a $10,000 trading account and you wanted to double it, how would you do it? You'd have to risk 10 to 20% of your account a trade to double it quickly, wouldn't you? Because you've got to do it in 30 days. If I came to you and held a gun to your head and said, here's 10 grand, if you don't make that 20 grand, by the end of the month, I'm going to shoot you. How would you do it? Would you risk 1% of trade? God, no. You'd never make it. You'd never make it. Yeah. This people can't see past a lot of this. And I understand why. It's the way it's set up is to look like you've got to make 8% on your account. But in reality, you're not. Are you? This is the thing. That is not how it works. So either you've got to go all in and risk 10% per trade based on your 12 grand or not. If you want to survive, and this is what I say, the people that last in prop, the people that hold accounts for multiple months, and there's very few of them, those are the people that are trading these accounts with very small risk, which means they never get anywhere near the drawdown limits. Or if they do, it's because they've been really unlucky, yeah? So they're getting a 100K account and they're going, yeah, whatever, just go for it, right? I'm going to pass in 5 days. I'm going in with 1% risk per trade, and I'm going to take 3 trades with a 3-to-1 R. Yeah, they all work out. Happy days, passed. But they don't do that when they get the account. When they get the funded account, they start risking 0.1% risk on 100K or 0.2% risk on 100K. And they start making $200, $300, $400 per trade, not $1,000 per trade, $2,000 per trade. So the aggressive 1% risk per trade is to get yourself over this, because they're asking you to basically, what every course in the entire world you ever take will say, when you go into the market, you put a stop underneath the low and you use 1% or 0.5% risk or 2% on an aggressive course that's teaching you badly to risk on your trades, right? On this account, what you don't realize you're doing is risking 10% every time. Yeah, because you're only trading with that. So that you've just, but if you do that, and there's no course that's going to teach you to double an account in 30 days. There are courses that teach you to do that, but you're never going to sustain it. There's no possibility of you sustaining it. If it was sustainable, everyone would do it and we'd all be millionaires. It can't be done. There's no one out there that I have seen has done this consistently. People can do it every now and again. I can do it every now and again, and I've done it. And if you think about it, every time you pass an evaluation, that is exactly what you're doing. You're doubling the account. They're asking you to make $8,000 with a 12K account. It's a lot. And you're not allowed to lose more than 5K of it in a day. So they're saying you can lose half of the account a day if you want, just under. Yeah, does that make sense? That's what's actually happening, isn't it, under the hood? So what you've got to do is when you take an evaluation, you've got to go, right, this is my account size. So if I get given a 300K account, I'm actually given a 36K account. So my return, if I make 10% return on that a month, 10% is a lot, isn't it, to make on an account a month? It's quite hard. That's going to make me $3,600 a month. That's my salary, which is why I'm saying go for the biggest possible one. Because when you start trading it properly, if you're going to trade it properly and try and hold the account, which is very hard, that's what your income is going to be. If you have a good month, you might make 5K, but you're only actually going to get a percentage of that, aren't you? Not all of it. Make sense? They encourage you to risk more. Yeah, exactly. Because that's their business model. Yeah, they make $20 million a month on this, right? They do not pay out traders that pass evaluations anywhere near what they make in evaluations. The business model is make 20 million a month out of evaluations. Yeah. The traders that get passed through to the pay phase is, we did the calculation the other day, didn't we? It's 1 in 1,000 or something, isn't it? That lasts for the first month, past the first month. Yeah. So those guys, do you think they're getting paid 20 million? No. They've got 37,000 active live accounts. Yeah. Bloody calculator, it's useless. I don't know what that is. I can't read it. But basically, 15% of those will get a payment. The average payment is $1,500. Yeah, so do the maths on that. Let's do the maths. So we've got 37,000 accounts. 15% of them actually get paid because they blow it before they get a payment. 5,500 of those accounts will get paid out of those 37,000, and on average they will make $1,500. Yeah, times 1,500. So their outgoings on a 20 million income from evaluation fees is 8.3 million. Not bad, is it? 12 million a month for doing nothing but setting up a website that automates people buying demo accounts. Good money. That's the business model of prop. And all these statistics are all on their website. I'm not making this up. It's here. Go and look at it. Read it. It's all here. All statistics that you need to know are there. Yeah. 19% of people get past phase one. They currently have 37,000 active live funded accounts. Yeah. 85%. This statistic of 85% isn't on here. It's on another one of their blog posts. But you can work out all the statistics on exactly what their business model is. I can't remember where. I think it was a previous month that gave their evaluation figures. And when you do the maths on what the average account size is, our most popular evaluation account is 10,000. Our least popular evaluation is 200,000. But you know, on these 37,000, right, the average payout, traders who have been paid over 20,000 during February, only 20% of them didn't have a stop loss. Of the 20%, 95% of them closed the trades quicker. 80% who had a stop loss, 99% of them had trades closed in loss before their stop, blah, 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 blah. Right? What they're talking about is 1 in 1,000 people that actually passed an evaluation here. These statistics, important user traits, are of a absolute minuscule minority of people that actually manage to get to a phase where they actually get a payment. $26 billion a day in volume. size of this business is, these guys are making an absolute fortune. Like 10 million plus a month of selling demo accounts. Such a good business. I might set one up. You'll all buy one, won't you? All 105 of you. One of you will pass. And then I'm not going to pay you. Anyway, there you go. So that's the business model. That's how you do prop. Or not. It's up to you. You know what the odds are. As long as you know the odds, you've always got a chance of winning, haven't you? Right, I'm going to leave it there. DAX is going nowhere. My DAX is probably going to stop out. So, whatever. Try another one later. So yeah, DAX is just literally going nowhere at the moment. The euro is coming down at the minute, which means the DAX is going to rise because the euro the DAX does the opposite to the euro. Euro is having a nice little fall off at the moment. Whether that stays like that, I don't know, because obviously this news is a bit temperamental. It's year on year, which is less important than quarter on quarter, rather, that one. And it is only a flash estimate, so it's not actually the final figures. So I get a feeling this might actually just be a knee-jerk reaction, and we're not actually going to get a reaction to it, but we'll see. If we do, it looks like it's negative, which means we're going to get a DAX rally. So if we're going to get a DAX rally, we're looking at 157.08 as the high, which is 100 points to the upside. That's where it'd be good to start looking for shorts. Right, that's it. So I'm off now. I will be back this afternoon at 2:20. If there's anything you need, come in the Telegram group. I will be in there as always. But I'll be back at 2:20 for the London session, for the New York session. I'll be back on Monday, hopefully with a bit more sleep. Might go and have a snooze this morning, actually. I'm getting old. So I'll be back for the New York session at 2:20, and we'll trade the Dow this afternoon, not the NASDAQ. I'm trading Dow. I've switched. All right. Okay, so I will see you guys later. Anything you need, come in Telegram. Otherwise, we'll catch up with you soon.